What's up, guys? It is Monday, March 6th. It's 2:24 p.m. and this is hot off the press. Legit, like 15 minutes ago, maybe. I mean, this just straight came from Ripple all of a sudden, and I had to download it so we could go through it. If you're new here, hit subscribe, hit the notification bell, get updated in real time when we drop these market updates, these newsletters, these deep dives. I think we're on like number 8 today, to be honest. I don't even know. I'm just going to keep ringing them off. Got to make up for that lost time. But blockchain and crypto and payments, Ripple and the US Faster Payments Council. Like, this is a hand in hand. They did it together. They did this kind of survey and a special report straight from the US Faster Payments Council. Even though you have a US kind of government agency suing them, it's just so odd. But a special report from the US Faster Payments Council and Ripple on the transformative opportunities of crypto-enabled payments and what leading providers expect next. This is about 16 pages, so we're just going to work through it. It's my first time reading it too. So this is what we got. We have forward from the US Faster Payments Council. The payments ecosystem is evolving quickly and in many different directions. The pace and breadth of change makes it a challenge to keep up with everything. Digital currencies are not new, and there are fascinating use cases that have already achieved scale. However, how digital currencies are perceived and how they might be part of the future state of payments remains a topic of much interest. Understanding the wide range of use cases and potential advantages of any new payments technology is important for all ecosystem participants, and we hope that this paper can help in that regard. While this paper focuses on digital currencies, it's important to approach it with the understanding that various clearing and settling mechanisms within the ecosystem can operate in parallel or as part of a broader holistic solution to complex market needs. You're talking about a whole new underpinning of the financial system at large. An approach that leverages the best attributes of various payments technologies can expedite innovation and advance the ultimate end user utility of the overall payment system. Cryptocurrencies, and more generally, the mindset of innovation that led to their creation and growth in the marketplace, are exciting for the future of payments. Cryptocurrencies present a potentially compelling blend of flexibility and utility. They appear well positioned to solve some seemingly intractable issues in payments by filling various gaps in payment flows efficiently and effectively. This report provides an overview of the use of cryptocurrencies in payments today, insights from participants in the faster payments ecosystem, and what the future holds for blockchain and crypto and payments. This is from the executive director of US Faster Payments Council. If you're new here, hit subscribe, hit the notification bell, leave a comment, let me know. Tell me keep it up. I'll keep ringing them off. So we got contents, introduction, brief overview of crypto and use in payments today, blockchain and crypto will enhance payments, speed and boost customer value, crypto's most attractive feature, cost reduction, enterprises gear up to support crypto payments, crypto's environmental footprint gives providers pause, and conclusion, bringing blockchain to payments. So let's dive into it. So we are on this. So introduction. Global payments volumes are on the rise, as is both interest and use of the crypto across industries and use cases. Ripple and the Faster Payments Council collaborated on an inaugural global payment survey to explore these trends among the growing payments market and crypto expansion. In order to better understand payment provider sentiment and their adoption of blockchain and crypto for payments, this survey surfaces perspectives on perceived benefits, future adoption plans, and any potential barriers to growth. Nearly 300 payment leaders participated in the survey, ranging from analysts and directors to VPs and C-level executives. Respondents represent a cross-section of global sectors, including retail, fintech, banking, media, entertainment, and consumer technology from 45 countries. Among the survey highlights, an overwhelmingly majority of providers see crypto-enabled solution as key to bringing speed to sluggish payments markets. Lower cost of domestic and international payments is crypto's primary benefit. Few enterprises currently support blockchain-based payments, but it is only a matter of time before more widespread adoption takes place. The pace of broader acceptance hinges on one critical factor: improved regulatory clarity. Boom, that's all we're waiting for. Once this case wraps up, dust your hands off, because it's straight up to the moon. Crypto's environmental footprint is top of mind. How much it impacts usage remains to be seen. All right, there we go. Brief overview of crypto use in payments today. So despite trillions of dollars still moving around the world via an antiquated and costly payment system, the promise of blockchain and burgeoning crypto use cases present one avenue for transformative payment opportunities. As adoption grows, both providers and customers appear poised to benefit from reduced process complexity, lower costs, and enhanced transparency. New research indicates that although global crypto payment transaction volume is small relative to total payment volume, its long-term growth prospects are bright. In the US, crypto-enabled or crypto payment adoption is on the rise with a forecasted 5.5 million crypto payment users in 2023. A 350% increase in just 3 years. As the figure below shows, of the 4 primary use cases contributing to crypto payments growth in the US, remittances are expected to remain the most mature use cases, followed by business-to-business cross-border payments. So US cryptocurrency payment use case maturity 2023. You have infrastructure remittances, that's all in the green, so 10, and then mainstream adoption, regulatory certainty, interoperability. Okay, so cross-border payments, card payments, digital payments. Okay, let's keep going. All right, so our other Ripple research supports these growth trends, showing swelling payment volumes across small to medium enterprises, treasury flows, and remittances. This further emphasizes the need for change, and global policymakers are taking note. According to the World Economic Forum, G20 leaders now prioritize blockchain technology to address problems posed by outdated financial infrastructure, including boosting stablecoin and digital asset use to create interoperable, efficient, affordable, and accessible financial systems. Encouragingly, leading payment infrastructure providers also embrace the need for innovation. Last year, PayPal announced the ability for users in the US to accept payments in Bitcoin and other mainstream cryptocurrencies, and Stripe incorporated cryptocurrency-based rails via USDC stablecoin. Remember, Stripe and Stellar have a big connection into its business payment solution. The company points to open access global financial rails as crucial for burgeoning online economies. Other payment processors, including WorldPay and Checkout.com, now support stablecoin payment settlement. Broader stablecoin adoption for payments can likely be attributed to cost savings. Cross-border payments using a stablecoin is up to 80% less expensive for the end users compared to traditional remittance operators. That means that for a $500 remittance, the cost of an on-chain FX conversion combined with the on- and off-ramps can be transacted for as little as $4.80, much smaller than the average cost of remittance, which hovers around $20. Elsewhere, the payment industry is trialing crypto in more novel use cases. Today, across insurance claims, rewards, rebates, and other disbursements payment types, U.S. companies generate more than 1.9 billion payments to consumers annually, and 1/3 are made by paper check. In an effort to help modernize and streamline this process, blockchain-based providers have targeted the corporate disbursements use case to pay employees, affiliates, and customers in a more timely, cost-effective way. This includes everything from insurance claims, rewards, and rebates to wages, loan disbursements, and medical reimbursements. Market providers recognize a range of use cases and benefits of crypto-enabled solutions, with growing interest from digitally native consumers expect pronounced shifts in the payments landscape. So blockchain and crypto will enhance payment speed and boost customer value. 97% of respondents believe blockchain technology and cryptocurrency will have a significant or very significant role in enabling faster payments within the next 3 years. 97%. Over 50% of surveyed leaders believe that most merchants will accept crypto payments within 1 to 3 years. 1 to 3 years. Over 50% thought that they would accept crypto payments. We're at the timeline. I mean, we're so close. I mean, we're not going to see the end result until last minute, right? Because if we were to see it right before, much earlier on, then there'd be more people holding by this point. A lot of people get impatient, right? So it's really testing the limits, and ultimately the treasure, the pot of gold's at the end of the rainbow, I'd say. So nearly every surveyed leader, 97%, believes blockchain technology and crypto will have a significant or very significant role in enabling faster payments in the next 3 years. For respondents, blockchain and crypto hold particular promise with respect to transforming cross-border payments. Juniper Research supports this notion, pointing to blockchain's potential to significantly increase savings for financial institutions conducting cross-border transactions. An estimated $10 billion by 2030, thanks to fast, reliable, and transparent payment settlement. Observers shouldn't underestimate the transformative opportunity here. Global cross-border payment flows are expected to reach $156 trillion by a 5% compound annual growth rate. $156 trillion. Observers should not underestimate it. It's a huge opportunity, once in a generational opportunity here. Respondents see additional crypto-enabled payments use cases, with over 50% of surveyed leaders believing that most merchants will accept crypto payments within 1 to 3 years. All right. And then also, optimism in these markets may stem from a growing appetite for broader financial access and inclusion, including other crypto-enabled payment solutions like mobile payments and CBDCs. All right, here we go. When do you think most merchants greater than 50% will accept in your region in the next year? So MEA, I'm not sure what that is, but yeah, there we see it. So while surveyed leaders don't universally agree here, growing crypto acceptance aligns with Ripple's previous research and sweeping convergence of factors conducted to adoption, from crypto firms sponsoring football clubs to state-sponsored CBDC projects as an alternative to SWIFT. Other applications of crypto and blockchain are being explored for various buying, selling, and lending use cases. For example, the California DMV is moving auto titles to the blockchain via Tezos, XTZ, those X coins, you got to watch out for them. Moving auto titles to the blockchain to streamline title transfers, automate manual processes, and provide much needed transparency and traceability to the vehicle lending process. It just makes sense, right? So while still nascent, the real estate industry is also adopting blockchain and crypto technology. With a growing number of homes being sold as NFTs, this opens up a world where a real estate transaction doesn't involve manual underwriting, appraisals, title searches, preparing deeds, and the home buying, selling, rental process can be much more efficient and cost effective. If you're a middleman right now and they're just taking a cut, kind of just like facilitating just a little bit of thing, you really need to understand what's going on with blockchain technology and how it's going to really kind of wipe away a lot of middlemans with things like, real estate transactions and things of that nature. So definitely get prepared and kind of foresee how you may be affected in the event of blockchain going mainstream. There's going to be, winners and losers here. So crypto's most attractive feature, cost reduction. The pandemic era infused new urgency around shifts to digital payments. Various physical limitations of financial insecurity sped up interest in crypto, enabled the more cost-effective payment offerings. In the survey, over 50% of respondents believe that lower payment costs both domestically and internationally is crypto's primary benefit. Nearly 90% of survey leaders acknowledge some cost improvements related to international payments, and a 75% expect domestic cost benefits. In particular, domestic payment providers seeing crypto as an answer to transaction and processing fees, which are often up to 4%. Interestingly, while these providers cite lower costs of cross-border payments as crypto's primary value proposition, only about half currently provide cross-border payment services today. One possible reason could be that the exorbitant costs and inefficiencies of traditional cross-border payments are inhibiting these businesses from expanding into new markets. There we go. So other research conducted by Ripple, the New Value Research August 2021, further supports sentiment around the lower cost benefit when asked what cryptocurrency can offer the organization. Roughly 30% of financial institutions and 40% of enterprise respondents cited lower costs for both businesses and consumers. While lower transaction costs will boost corporate margins, those who push savings to end users may outperform with respect to customer acquisition and retention. Today, the global average cost of remittance remains painfully high, 6%, double the Sustainable Development Goal targeted by the UN. Enterprises gear up to support crypto payments. There we go. So by leveraging a digitized asset, you can move funds in real time, bypassing the pain and costs associated with correspondent banking in favor of real-time settlement. XRP, baby. So leaders foresee the new world of payments that crypto opens up. One rid of pre-funding, high transaction fees, slow settlement times, and opaque capital flows. While these benefits are clear and the majority of respondents are considering crypto use, only 17% currently support crypto-enabled payments. Why? For payment providers, regulatory clarity remains a primary hurdle to go-to-market efforts. When given the option for multiple responses, almost 1/3 of participants cited regulatory clarity exclusively, indicating no other perceived barriers to using blockchain for payments. So no wonder why they threw a wrench in all this, right? It's just the regulatory aspect. Once that's all set in stone, they're good to go. Green light, baby. So moreover, for respondents who cited additional adoption barriers, nearly 90% point to a regulatory ambiguity as the main deterrent. Even the second most cited concern, limited industry acceptance, may be a corollary of regulatory unease. A Deloitte study of senior retail executives found the merchants widely agree that accepting digital currencies offer a competitive advantage, but more than 50% agreed that regulations must be enacted, including national guidance around holding digital assets, clarity about the tax implications of using digital currencies, and the ability to hold digital currencies in a bank account. So while regulatory clarity appears to be the adoption linchpin, the industry is trending in a positive direction. In the US, President Biden released the first of its kind framework for crypto regulation. Highlights include how financial institutions could and should adapt and evolve for better cross-border transactions, as well as the benefits of digital currencies like CBDCs and stablecoins to enable a more efficient, sustainable payment system. In addition to regulation, respondents also cite mild concern around technical investment to overcome existing fiat approaches. 20% of surveyed participants noted a need for simplified infrastructure capability. So given enterprises' practices of converting accepted digital currencies into fiat, changeover costs to support crypto payments are naturally concerning. According to research conducted by Ripple and Oliver Wyman, as more financial institutions and organizations look to incorporate crypto, the reticence may wane as technology service providers introduce more user-friendly plug-and-play solutions, some even boasting compliance-adapted functionality specific to states or nations. They're toting it out. They have the sauce. They got the software. They have this plug and play. They can have the compliance adapted to certain kind of states or nations. It's game over. It's game changer. So we now have leaders in Congress on both sides of the aisle championing legislative solutions. The dialogue around crypto is much more sophisticated than it was 2 years ago. Susan Friedman, Director of Policy at Ripple. Crypto's environmental footprint gives providers a pause. So then it talks about proof of work to proof of stake. And over 50% of surveyed financial institutions said that they would prefer a sustainable blockchain, and 75% of consumers said they would rather prefer a sustainable one. And then the consumer attitude to crypto and sustainability would only be, okay, so yeah, so you have a good chunk caring about the sustainability aspect. Importantly, the IMF recently probed the energy profiles of payment types, noting that some crypto assets can be more energy efficient than much of the current payment landscape. Increasingly, both policymakers and the public express concerns about the environmental impacts of money, including traditional fiat currency. One university study estimates that a total annual environmental cost of the 50 billion US banknotes in circulation would be 12.9 billion. So more recently, the Economic Times noted the potential savings associated with the digital rupee, a digital currency alternative for the Reserve Bank of India. For every rupee 100 note, the cost works out to be around 15 to 17 rupees. This includes environmental and operational costs ranging from printing, distributing, and disposing of soiled notes. Meaningful crypto use among payment leaders may ultimately rely on digital assets with more sustainable underlying technology. For example, decentralized assets which rely on transaction verification methods that consume negligible energy. Given the bullish sentiment of surveyed leaders, however, environmental hesitations aren't expected to derail crypto payment ambitions, but keeping pulse on the intensity of this concern may provide clues as to when crypto payments will go mainstream. In the meantime, questions remain. Will the optics of excessive energy usage inhibit crypto payment innovation? Can providers recognize sustainability nuances between blockchains and articulate these successfully to stakeholders? Is familiarity with the environmental impact of certain blockchains enough? Or will additional steps need to be taken to further educate providers on the importance of sustainable payment methods? While we drive toward innovation, we cannot lose focus on other societal imperatives, notably the need to reduce energy consumption and be stewards of the environment. Survey respondents see the potential utility of cryptocurrencies and are appropriately interested in ensuring responsible use of the technology that is not detrimental to the planet. That's the Executive Director, U.S. Faster Payments Council. Bringing blockchain to payments. 100% of respondents agree there are benefits of blockchain and crypto and payments. There's no denying it. So payment providers intrinsically see value in blockchain. When asked about the benefits associated with blockchain and crypto and payments, no respondent cited being unclear on what those are. In particular, an overwhelmingly majority of participants noted shifting perspectives with respect to crypto-enabled payment solutions. The views make sense. Universally, payment providers are tasked with ensuring speed, security, transparency, and flexibility within payment strategies. To the extent that the emerging solutions enable this, providers will respond. The goal of this report is to give industry participants a better understanding of the state of crypto usage, current sentiment around acceptance and adoption of crypto-enabled payments, and to highlight the potential transaction-related improvements crypto introduces. The report also flags concerns, an important component of understanding what solutions providers must overcome to fulfill crypto's promise. Few argue against the need for transformation in today's antiquated, often exclusionary payments market. Crypto may offer that answer. If so, we expect forward-thinking payments leaders to lead the way. Ripple and the Faster Payments Council are working to help shape the future of payments and look forward to learning, growing, and building with you. There we go. Methodology about Ripple, about the Faster Payments Council, right there. I mean, it was a joint report. You're telling me that the US Faster Payments Council is doing a joint report with Ripple about upgrading the antiquated financial system. Meanwhile, you have the SEC going after Ripple and saying that they're, scammers, frauds, this, that, and the other thing. There's a bigger game at play here, and that has been kind of what my thought process around that is. So I don't really pay too much attention to the case because ultimately, it's out of my control. It's up to the game and the bigger kind of scene that's being played here. And obviously there's more to what the eye sees on this. So I think everything's going to pan out for us pretty great. We'll have to see, but I know I'm stacking up XRP. So that's it, guys. I'll see you guys in the next video.